You know, the great thing about Primerica is that you can build whatever kind of business you want here. You know, if you want to specialize in insurances, you can do that here at Primerica. If you want to be great at the investment side of our business, you can do that at Primerica. If you want to get great at the mortgage side of the business, which is what this training is all about, you can do that at Primerica. And if you want to be a recruiter and trainer and developer and build agencies, you can do that at Primerica as well. But you see, my objective over the next few hours is to demonstrate to you why, regardless of any of those means that you choose to build your business, why it might make sense to include mortgage as well. And you see, all of this starts with our mission statement. We all know it well, and that is to help families earn more income, become properly protected, debt-free, and financially independent. You know, the unique thing about the mortgage program is that it touches on two of these tenets: teaching families how to get out of debt faster, whether it's through debt consolidation through our second mortgage program or a cash-out refi, where we might be able to free up some dollars and then help them accelerate on that debt to pay it off faster, or to help them become financially independent by building equity in their home, as we'll talk about in just a few minutes. But let's start with this opportunity. You see, what I need each and every one of you to understand is that the debt crisis in America today is bigger than ever before. As you can see, since 2013, debt has been on the rise steadily. Between COVID and then inflationary pressure, families have been accruing more and more debt every single year. And as you'll learn through this training, we have some tools and options to hopefully help them pay it off even faster. But let's talk about the financial independence part. Because the reality is most people wouldn't equate mortgage to financial independence. But as you can see from this graphic, as you continue to build equity in your home, as homes appreciate over time, and as we pay down that debt obligation, that provides an additional asset for families. So how big is this opportunity? As you can see, over the last 20 to 25 years, mortgage volume has ebbed and flowed over time, as much as $4 trillion a year during the refi boom just a few years ago. But if you average it out, over the course of time, on average, it's about $2 trillion a year in opportunity. Now, what does that mean for us in the sales force? Well, number one, $2 trillion, if we just capture 2% market share. You know, we talk all the time about in the life insurance side of our business, we've got about 2 to 3% market share. If we did the same just with mortgage, it would equal $440 million in compensation to the sales force. Now, I want to put this in perspective for you all, because we talk about the three-legged stool, right, of life insurance and investments, but now we have a third leg, and that's mortgage. When you think about current compensation paid to the sales force, about $500 million in life insurance, a little over $500 million in securities, you can see the opportunity for all of us when you add a third leg with another $500 million of compensation opportunity. So what does this look like for people? You know, when I got started in the business, when you talked about making 6 figures in Primerica, getting that ring, in my opinion, the fastest way to do it was to become a regional vice president, where you'd go out and train and develop people and build an agency. Now, alternatively, you could do it through the securities part of our business. You could go build assets under management. But as we all know, that might take a little bit of time, because you got to get decent at the business. And then you've got to have enough confidence to go out and start landing those larger trades to build your AUM even faster. But I believe with mortgage, there's now another opportunity. See, it's what I'm going to call the product specialist. The person that, whether it's focusing on investments or insurance or now mortgage, but mortgage specifically, they can go out and build relationships with realtors, and as a byproduct, grow their mortgage business. Now, in addition to that, if you happen to be in an office where there's not a lot of other MLOs or mortgage loan originators, other people in your office will refer clients to you. And so now the opportunity becomes even bigger. Or alternatively, you could be a regional vice president and say, you know what, I don't know that I personally want to be involved in the mortgage business, but I want to attract people that will. And so you'll go out and maybe attract 2 or 3 or 4 agents that go, I want to go get that mortgage loan originator license. And you can refer clients to them, whether you're doing a mobile F&A or a regular F&A or however you build your business. As you come across those clients, you can refer them and your business will grow. So let's talk about path 1, which is what I referred to as a product specialist. Now in this world, imagine being able to go out and build a relationship with 5 to 10 realtors. And as you build those relationships, those realtors start introducing you to a few clients. And imagine just a few clients a month, and the average loan being $200 to $250, which is actually below the average that Primerica currently does. So on average, you start doing $1 million per month in loans. The compensation just on that alone is about $7,200 per month. Now, by the way, if you're doing that level of volume, you're probably going to qualify for our President's Club program. And what that means is extra compensation on the production that you do in quarters moving forward. Now, by the way, that's not the end of the story. Because you see, on top of that, there's other services that you're going to be able to offer your clients. Think about it. When they close a mortgage, they're probably going to need some homeowners insurance. And so that gives you the opportunity to introduce our auto and home program. Perhaps they need a Vivint system installed after they move into that home. They also may need some life insurance because now that their debt obligation is increased, we probably need to have that conversation. And last but not least, if you take an application the right way, you ask clients about their existing assets, you're going to find out about every 401k that hasn't yet been rolled over. You'll find out about IRAs at other custodians that you'll have an opportunity to go after as well. So when you start to understand all of the possibilities that you can now have as a product specialist, you can see exactly what that opportunity looks like. Let's take a look at a quick client example. Now, we've all seen this example before. This is the example that we've used in all of our brochures. We just made one slight adjustment to it, and that is including a mortgage example of $250,000. Now, to give you some perspective, if you went out and started doing approximately 4 loans a month, $1 million a month in lending, and as a byproduct, got some life insurance and some investments and some auto and home and some Vivint referrals, as a rep, folks, not a senior rep, not a district, not a division, not a regional lead, as a rep, we're talking over $100,000 a year in compensation. Now, by the way, let me give you an idea of how much faster this might be than building assets under management, as I mentioned before. You see, I believe somebody can come into the business and get their life insurance license in the first 30, 45 days. I think if they're serious, they could turn around in the next 30 days and add a mortgage license. And then spend the next 90 days going out and building relationships with realtors where by the 6th month in their Primerica business, maybe sooner, maybe it takes a little bit longer, but they start doing $500,000 a month in lending and then $750,000 and then $1 million. And by the way, if you're a regional vice president and you decided to add mortgage to your business, we're talking about an increase of $150,000 of compensation. Now, I want to put this in perspective for all of you. You know, if you're a regional vice president right now, first of all, congratulations. But if you don't yet have this ring, adding mortgage, if you're making $50,000, $60,000, $70,000 a year right now, it didn't just get you the ring, it got you the ring with probably 2 diamonds in it. And maybe you're one of those regional vice presidents where you're at $100,000 to $200,000. Maybe you're going, man, my income's plateaued. What could I do to increase my cash flow? Add mortgage. And if you're making $150,000 a year, guess what? You didn't just add some diamonds. Now you just qualified for ownership. And if you're an RVP that has ownership, how about taking your income to $500,000 to start your run to the Ruby? See, I don't care what level you're at as a regional vice president. mortgage can have a tremendous impact on your business, but more importantly, on the clients that you serve. Now, there are some regional vice presidents that I'm talking to right now. They're saying, Eugene, I don't ever want to do a mortgage loan. I'm so focused on recruiting, training, and developing people. That's my focus. I don't want that focus shifted. Let me tell you why mortgage is for you as well. You see, you don't have to be a mortgage loan originator to go out and override mortgage loan originator business. What I need you to understand is this, is as a regional vice president, every time you teach a brand new agent to go out and make a six-figure income just doing mortgage, your override income can be almost $50,000 a year. Now, just think about that for a second, y'all. Develop 2 or 3 or 4 or 5. What would that do to your compensation while still remaining a recruiter and trainer and builder of other people? You see, I don't care if you're a rep, a regional vice president, wherever kind of business you run. As you're starting to understand, mortgage can be implemented in your business to help you become more successful. But I want to take it from one other perspective, and that is the impact to your clients. You know, imagine that you got a client, and they were just 25 years old, and they sit down with you, and they decide that they're going to take out a life insurance policy with you. But as part of that conversation, you start asking them about their goals and their dreams, and they say, you know what? I want to buy a home in the next 6 months or 12 months or 18 months. And so you start helping them save money. You start stashing it away into an emergency fund. So now they have the down payment for their first mortgage. And so a year later, you help them get into that home. But not just that mortgage. You now help them shop their auto and home rates. Maybe you help them get into a Vivint system to protect that home. Now, a few more years goes by, and as you continue to review with them, you realize that now they have enough income that they can start some IRAs. But they also have had their first child. So now all of a sudden you're setting up a 529 plan maybe for that child. And then on top of that, we've got to increase their life insurance, all because you kept following up with them because you helped them do a mortgage. Fast forward a few years later. One of the spouses leaves their job. They get a better opportunity. And so now you're able to help them roll over that 401k. And then a few years later, guess what? They have another child. And so now they've outgrown their current house. They need a what? New house with another mortgage. And then fast forward a few years later, rates drop. And just like that, you get to refinance that home for them as well. You know, in the managed account side of the business, we talk about it being a lifetime relationship with the client. That's why it's known as our lifetime program. And what I want you to understand is that mortgage truly allows you to serve your clients for their entire lifetime. You think about the average person that buys 2 to 3 homes in their life, you get to be a part of every single one of those transactions. And so by adding mortgage, in my opinion, you can make a bigger impact on families, and obviously it helps you grow your business as well. So what can you do with a mortgage license? Well, number one, as we just talked about, and as you'll learn in just a few minutes as we cover it through our training, you're going to be able to help people buy their first home. The second thing you'll be able to do is as rates drop, you might be able to help them refinance their home to get a better interest rate. The third option is what's called a cash-out refinance, where maybe they've accumulated some debt. And so it makes sense as they're refinancing that property to take some cash out to pay off some debt. Or maybe they want to do some home improvements. They want to add a pool to their home. And so they could take some cash out when you're doing that refinance to fund that project. And last but not least is our second mortgage program, where we can use second mortgages to consolidate debt or to help them with home improvements or anything else that they may need. And we're going to learn more about all 4 of these over the course of this training. But what I hope you took from Section 1 is regardless of what kind of business you run at Primerica, it is absolutely critical, in my opinion, that you make sure that mortgage is a part of it.